Today, I'm Chartered, your accounting tutor. In today's video and class, we are going to continue with end of accounting period adjustments. End of accounting period adjustment. I told you that these are areas whereby most learners find it very difficult to handle. And that's why I'm taking my time to treat them one after another with the best explanation. And the method I'm also using, as I explained earlier, is to enable you know how these adjustments are being incorporated back into ledger accounts, where an adjusted trial balance is being prepared for you to use it to prepare the financial statement. That is the real standard. But most learners believe that adjustments are done directly in the financial statement without doing any other thing. But the real accounting process says that if adjustments arise at the end of the year, you must incorporate them back into a ledger account, into a new ledger account, so that you create balances brought down that will be incorporated in the new adjusted trial balance, whereby the adjusted trial balance will now be prepared without adjustments, thereby using it to prepare the financial statement. That is the approach I'm using, and that is the real accounting. I want you to follow to have the sound foundation that is needed in accounting. Let's continue. Accrued income. What do you mean by accrued income? This is income earned by the business but not received during the accounting period. This is income earned by the business but not received during the accounting period. Income earned means the income which is due for the business to receive. For example, the business invested into shares in another firm, or the business invested in any investment at all the business have done in another firm, and the year have passed, and every year the business is supposed to receive what is called dividends. But at the end of the year, the dividend that is supposed to be received by the business was not received. But it means the year have passed over. That means the business have earned that very income. The business have gotten that income, but they have not received it. So we call it unearned income, or income in arrears, or income outstanding. The income have been earned by the business but yet to be received. So in this case, how do you handle it? Let's begin look at the types. We have basically two types of income. Of a source adjustment. We have accrued income of previous period brought forward. It's possible that there was an income accrued in the previous brought forward to the current year. Then the second one, we have what is called accrued income of the current period, whereby the current period, like in my example here, is 2025. So if 2025 ends and the business an income in any investment and it's yet to be received, then we call it unearned income that is accrued. That is the income that is earned but yet to be what? Received. So look at this question briefly now. Here we are saying that the previous trial balance, which is on the 31st of 2025, which is an extract, the dividend was for, mind you, dividend is an income. All income are created. These are principles I gave you when I was teaching double entry. All income are credited. So here, dividend received during the period was 4,000. But mind you, it means that it is not all the 4,000 that was supposed to be received. The actual amount that was earned by the business supposed to be 6,000. So 4,000 was only received in the current year, while the other amount was still unearned. But another situation will be another area whereby even nothing will be received, but only 2,000 will be so nothing will be received as dividend, but the whole amount will be in arrears, will be outstanding. But in this case, part of dividend were received while the other one was owing. So how do you handle this type of adjustment? Let's look at how we treat it via the ledger to incorporate it into the adjusted trial balance. You come and open what is called dividend receive account. Dividend receive account. Then in the credit side, you bring the amount that was part of it that was paid via the trial balance. As you can see, it was in the credit side of the trial balance. You take it to the credit side of the dividend receive account, which is an income. Simple principle is that all income are credited. All income are credited. Then income accrued in the current year are added. You add it to the one that's already paid. So here we add the accrued dividend of 2,000, which was supposed to be paid but not paid. So if you add the accrued income with the one that was already received in the current year, you will get 6,000. Then 6,000 is what we charge in the profit or loss statement, in the profit or loss statement, loss account. So this is the amount that the business supposed to receive in the current year, while they receive only 4,000 naira. Then you now come and open the corresponding account because we have accrued dividend to 2,000. Then you come and open accrued dividend account, which will appear in the opposite side, which is the debit side. So open accrued dividend the debit side, then you now put it here. Then the next, you balance the account up by saying the balance carried down in the accrued dividend account is 2,000. Then the balance brought down will be 2,000. Mind you, accrued dividend is current assets. Mind you, accrued dividend is current assets. Current assets because the business have already earned the income, but yet to be received. Therefore, it's an asset to business. And all asset balances brought down are debited. All assets balances brought down are what? Debited. And that is why the balance end up to be in the debit side. Then this is how to handle it in respect of trying to incorporate it into ledger account. We are trying to prepare what is called the adjusted trial balance. Let's look at how you treat it in the statement of profit or loss account. Coming to the statement of profit or loss account, you now treat dividend received as other income. Mind you, as you prepare your trading account or what is called trading account, profit or loss account, you must start with trading account. After trading account ends with gross profit. When you get your gross profit, the next segment is what is called other income. If you are watching my video in the previous class, I gave the format of how to prepare trading account, profit and loss account, and everything. So you discover that after getting your gross profit, which is the end of trading account, the next section is what is called other income. Other income are income that are added to gross profit. So, and that is the beginning of profit or loss account, profit or loss statement or account. So in this case, after getting your gross profit, the next section is other income. Under other income, that is where you found dividend received. So you now go and pick the dividend received that is given to trial balance and come and introduce it. Then you now add accrued dividend to the one that's already received. 2,000 plus 4,000 give you 6,000. And this 6,000, mind you, is under other income, which will be added to gross profit that is being gotten from your trading account. And this is a format. Mind you, address an extract. But if you master the format, you know exactly where other income is positioned. You know that what you get from here is added to the gross profit, which is the main income. Next, we go to the statement of financial position, how accrued income are treated. Accrued income are treated in statement of financial position as current assets. Mind you, I told you that income accrued are current assets because it's income earned by the business, which become a business income that is yet to be received, then it become an asset to the business. The under current assets, dividend accrued is treated under it. As we put other current assets, dividend accrued also will appear as one of the current assets. This become how the adjustments are made in the financial statement. Mind you, of any adjustment must have two effects. Like here, it's having an effect in the profit and loss account. It's also having an effect in the statement of financial position. Mind you, this is the end of accrued income, and this how accrued income are treated in the financial statement. So if you got any accrued income is giving you any question, please just handle it the way I've demonstrated by putting it under other income. Add the amount that is accrued, the previous amount. If the previous amount is not given, just go straight and pick the amount and add it to other income simple. But if it's given, you adjust by adding to it together. But if it's not given, just take the accrued income, which is 2,000, and treat it as older income. That is, just take the 2,000 and put it here to serve as older income. Then by the time you go to the statement of financial position, the accrued income will be part of the current assets. Don't forget to follow my video, like and comment, because I promise to do justice to all the adjustments one after another as you follow. Mind you, I bet you will not have any issue. If you see any adjustment, just follow the video and treat it the way I'm telling you, you get it right. And like and share my video in such a way that other learners that are finding difficult in trying to handle this area will be able to do it perfectly. I'm Chartered, your accounting tutor. See you in the next class.